All right, good morning, members, and welcome to this week's edition of the Weekly Review. Take a look at what happened last week. We missed a week. First time I've missed one in probably 2 or 3 years. But, not a lot happened last week. Actually had a little drawdown, the Russell in particular. Still up decent on the year. Dow's the one that's lagging now, which is kind of interesting. That's industrials. That's the things that move the economy, supposedly. I don't know if it's as much of a reflection as it was, way back in the days of Hamilton and Dow, but, it's the general ideal of the Dow Jones. So a little bit of a weakness there, but for the most part, these markets continue to try and go sideways at worst and work higher over time. If we take a look at, kind of the technical picture, over the years we've seen worry after worry, right? There's always something. And if you think about it, from that sense, if you're going to believe that, something bad can happen, you're going to be paralyzed and do nothing. That's why we try to take a look at the technicals. We try to dismiss all of that noise that we hear all the time. We try to turn the TV off and just focus on what's happening in the market, the technicals, right? There's times when you have to be safe, and those times are typically when you have, multiple swing point lows on multiple time frames that can break, and we just don't have that, right? I mean, if I take a look at what's happening here, and I'll pull up the S&P, and we'll just look at the time frames. Here's the S&P. Here's a swing point low here. This one also is a swing point low. So you got one on this time frame around 2130, what is that, 2135, 2136, and then the other one down here at 2120. Now bring over the weekly and look at it. Where's the risk here? Well, it's way back. Actually, it's this one. It's the highest one, 2022. Right? We'd have to fall 140 points to get down there. Now, can we do that? Yeah, it's possible. But to get there, you're going to have to go through a lot of stuff. Right? First, you got to get over. There's another bullish retest region over here. There's this one here. There's another one inside that one. Right? You got to break all of these down to even get to the swing point low. And so, yeah, is it possible? Yeah, it's possible. Is it likely? No, it's not that likely, at least not right now. And to get there, you would have, usually some sort of a projection that would get you there. ABCD structure, if we do break lower, would just bring you into this area, which is the bullish retest and attempt to regenerate back to the top side, right? And then you could draw in this one, right, and say, okay, we get that deep of a pullback. That potentially just gives us another ABCD up. So, I mean, we're not at a point now where we have to worry about crashes and things of that nature. Can it get bad? Sure it can. But we should worry about that when that possibility is higher, not when it's a remote possibility as it is now. And if you look at all these indexes, they're all the same, right? There's no setup there that looks different. Now, if we move to the sectors, there are some worries. And in particular, those worries are concentrated in particular sectors that are related. And so I've outlined them here. I'll just pull up a couple of them. We'll start with the home builders. Here's the home builders. They've already broken down. They broke 2 swing point lows down here. Now they're setting up new ones, right? And they're struggling. And if you look at it here, right, that swing point low is 25.79. If we break there, then something more major is taking place. So home construction, yeah, may be under pressure. If we look at some of the others, right, IYR, a little different story, but the same theme, and that is that here you got a breakdown on this time frame, and you're starting to break on these, right? So you've already got the rollover taking place in the real estate. Let's look at XLP, right? Now, if you remember, all of these things have been, skyrocketing, have been moving, and I'll just bring over the XLP's chart. Long term, right? They're just coming back to a bullish retest region. Look at this increase, right, on something that's quote unquote safe, right? You're getting a breakdown here. If you come back, you're coming into the swing point low, just broke it. So we're getting the rollover in some of these. And what's common amongst all of these? It's interest rates, right? As the idea that we're going to get another increase in the interest rate, All of these things are being hurt by that because they're all competitors to that. And so when you look at it from that perspective, okay, they all are moving the same way. I actually tried to play a stock, STOR, which is a REIT. They're getting hurt too. Nothing that competes with interest rates now is doing well. Will that change? Yeah, I'm sure it will. But what's happening? The market's pricing in the idea that we are going to get a rate increase in December. The market always prices in things, and that's what it's doing. The other sectors that's really getting hurt, XLB, and this is really just basically the mining in general. And we've seen it in gold stocks. We've seen it in silver. We're seeing it here in the XLB. These stocks are getting hit. Is it a major concern? Well, if they start breaking swing point lows on multiple time frames, then yes. But right now, they're just coming back to it. Now, this has been one of the weaker sectors over the years, right? We actually went bearish, turned sideways again. But, is this rolling over? Is it a big move to the downside? We don't know that yet. We just know that it's struggling at these levels. Mining sectors, interest rate sensitive sectors. Everything else is doing pretty well. And I believe that what we're seeing, we're also seeing it in the bond prices trying to roll over, is what we're seeing is that we have a correction taking place in interest rate sensitive things. And in some ways, actually gold fits in there too, right? Because if you're going to if you have negative rates, gold makes sense to hold. If you actually have interest that you could earn on your money, instead of putting it in gold, you might want to put it in something that gives you interest. And so that's also, partly what's playing in with these mining stocks. On the flip side, you've got huge positives in the two heaviest weighted sectors in the S&P 500. Here's the financials, right? They broke over two swing point highs, held so far, volume pushing pretty well on the upside. Here it is on the weekly. You can see it's coming after these two swing point highs up here. If we look at it on monthly, right, it still has a ways to go just to get to the highs. Big positive. And then the other one that continues to be a positive is technology. And as you know, technology has been holding this market up. Here it is on the XLK. New highs on the weekly, still holding up there, and on the monthly as well. So two biggest heavily weighted sectors still positive, and I don't think that's changed since we last talked. What do you want to watch for the coming week? I think the uncertainties are starting to be priced in. Elections, earnings, the Brexit, the central banks, all that stuff I believe has mostly been priced in. Unless something goes out of the norm. For example, Clinton is expected to win. If all of a sudden it looks like Trump's going to win, then things are going to have to get repriced. Earnings, I believe, are being priced in to actually beat. If that changes, then I think that will be a negative. The same thing here, the Brexits, the central bankers. I think they've already priced in most of that. And so at this point, unless we get major changes, I think the market's already priced those things in with this correction, this range that's been taking place. On the fundamental side, right, oil prices, energy starting to make new highs. I've been harping on energy now for a good week and a half. Big move up in the XLE. This looks like it's a major turn. I've said that as much to you. I believe this is an area that you really should be focused on if you're not. Benefits banks, it benefits the energy sector itself because the debt default risk kind of dissipates. Domestic growth, fundamentally just keeps going, right? It hasn't stopped. I mean, I don't see any recession on the landscape at this point. I don't even see it internationally. And so, if the economy is going to keep chugging along, then I think the market, even though the market's not always going to go lockstep with the economy, unless you get a recession, I don't think you're going to have pressure to push this market lower. Bond prices, they're holding lower, but if you look at bonds, and I'll bring up the TLT here, I'll just bring up world bonds, just a measure of the world bonds. Here's the BND, for example. If we look at this, it traded down into that area, tried to flip around on Friday. This is just a correction after a nice big move up. And so as long as it holds in this area, which is what it's trying to do. I mean, there's a bullish retest regen on this particular one. You can see it right here, right? So far it's holding it. If you hold that area, right, then they're just doing a correction inside of this larger move. That's in this case kind of a range trade. As long as you stay in a range, market doesn't care that much. It's when you get fast moves outside of it that the market gets worried. We got less data this week than usual, and Yellen's going to speak on Friday. Those are some things that can move the market. You know, what's the bottom line here? You know, the most bearish case that I can construct, and I'm going to pull up the general markets again, the S&P. It really is on a short-term time frame. You know, when we're doing this, we're looking at that, and that is that we have this range that's in effect. You know, you have the range, and I'm going to draw it out here again. That's basically these two quadrants, right? And they're fairly equidistant, which is kind of what you want to see, and they're fairly clean, right? I mean, each time you come down here, it tries to hold, right? Every time down, so far at least, this area has tried to hold. You can see all these spikes to the downside, and all of them get turned around, and it heads right back the other way. That tells you that area is important. If you break that area, right, then you've got an issue. And so I think the downside would be a break into this bar, get into this bar, and stay into it. In other words, you get down here and you stay. If so, and you can't get back up, you're going to try to reach the other side. That's the most bearish scenario that I suspect that's out there. On the bullish side, it's the opposite, right? It's getting over the range. And I think if we see that, right, we're probably going to see new highs. We already saw it spike over it once. This is the key bar. Get over it, stay up here. You're going to gravitate towards the high. What are we probably going to do this week? I think we're going to get right up into this top of it, and we're going to go into the meat of the earnings season trying to break higher. That's kind of my expectations. That's what I say here. That's what I'd be looking at. What's the best short, long-term trading ideas? I think some of these heavily weighted stocks and heavily shorted stocks might be some of the best places to look. And the reason for that is these stocks can just, you know, they can just take off. And I'm going to show you one that's already done it. This is the Gap, right? Huge spike up on Friday. I don't know what the news was, but that's a short interest covering spike, right? I mean, huge volume, big move, something triggers it, and then it just goes, you know, what is it, bombastic or something, 15% on Friday. There's a bunch of these stocks that are out there. I've highlighted them all. The ones that are set up the best, these are the ones I highlighted. And look at them. You got them in retail, you got them in technology, and you got them in the oil sector, in the energy sector. I think those are the three areas that I would be looking. In the best long-term stuff, I still think that energy is making a big turn. Whether you try to ride it right here or you just start here and you buy back any kind of a pullback, it will be up and down, but it's making a big turn. And then of the dollar I've talked about many times, I still think the dollar is a good trade to the upside long term. It's probably going to work higher. That's it for this week. Thanks for joining me. I'll see you next time. I actually have an announcement, in terms of direction of the site coming up here in the next week or two. Stay tuned for that. Big changes one more time. I've been working towards some larger changes that I've talked about before. I'm going to update you on what those are and how those are going. And so I'll be trying to describe that within the next couple of weeks. That's it for today. Have a great one. Take care.